All right, what's going on, everybody? So it's Friday, September 23rd. Happy Friday. It's about 8 a.m. my time. We got prices of Bitcoin currently sitting at 18,900 and some change. We can see basically, yesterday, turn off this music. We can see basically since yesterday and 2 days ago, when we had this big sort of chop after the FOMC, the market continued to grind up all of yesterday, and now it looks like, it's starting to roll over. Now, again, we don't know if this rollover means that we're going to start heading back down towards the lows from, 2 days ago, or it's just a slight minor pullback and we're just going to, head up higher, right? We're not quite sure about that. But if it's, looked at from the perspective of equities, okay, here was the key area of support, which is a very clear level for equities, 3750 right here, that just got smashed through overnight. Okay, this is not a good sign by any means, because 3750 was a level that after the FOMC, it held this level all through yesterday and then smashed through it overnight, right? So unless today that level is reclaimed with force, we should expect this movement right here to be translated not only in crypto, but possibly in equities to break further down and drag crypto further down. Now, crypto is actually in a very unique spot, which is that, so if you look at US equities, right, we're at, pretty decent higher lows right here on the US equities front. BTC is very, very close to its June low, right? Of course, like from a structural perspective, it actually came much closer to the June low 2 days back, okay? But if you look at other aspects of the market, say, for example, Ethereum, then that's a different story, right? Ethereum actually, if I pull up a fresh chart on ETH, this is kind of how ETH looks. Okay, all it really did was it came into this area right here, right? It came into that area, which was previous resistance all through here in June and July. When we broke up through that, we're now here as support. So it's not like we've done anything spectacular when it comes to, printing possible, bearishness on ETH. This just kind of looks like, okay, we're just retesting a key SR level. So what I find unique in a situation where equities actually look like they're about to nuke the lows, but Ethereum doesn't really look that weak. And in fact, it looks like maybe it has bounced off this level and it may push up higher before it breaks lower. Today being Friday, right? Fridays are, in fact, the I wouldn't say worse, but they're the trickiest in crypto. Why? Because Fridays bring about insane chop and insane volatility in crypto that you just can't fathom, because as you head into the weekend time, crypto has this unique ability to just chop people to death and take liquidity on sides where you would not think it's possible, given how weak the market is, whether it's, weak to the upside or weak to the downside. Crypto has that unique ability to take that liquidity, and by the time Sunday markets open, the following week, or Monday markets open the following week, the markets mean revert back to where they closed Friday, right? And I think that's been a unique situation in crypto. And so with Ethereum, if you don't see this level smashed through today, meaning if we go back to the daily, what I just mentioned, see this SR level, right? If we see US equities looking like shit like they are right now, and again, US equity markets are not open. There's 19 minutes to go till the S&P 500 index opens and stocks open. This is just the futures. So if the futures are anything, indicative of what may be coming, say today, then we should see a gradual drag on BTC towards the June lows. It doesn't mean we have to take out the June lows, but at least we need to head further down towards it, and rather, we need to see that being translated into ETH, right? We need to see ETH also start to roll over, okay? Now, other assets we have, Atom, right? Again, Atom has been one of the strongest assets over the last, say, several months, right? If you look at Atom on a multi-month basis, it has been incredibly strong holding up this trend line. And, more power to it, because Atom is probably the only thing right now that's even worth bidding to the long side, okay? If you look at the 20 and 40 EMAs right here on Atom, they're very nicely trending up. So the momentum on a 2 to 3 month duration is actually trending up alongside this trend line. However, as we start digging into the smaller time frames, Atom has become choppy over the last, say, week and a half, 2 weeks in this particular area. And you could see on a 4-hour basis, we've actually made a bear cross right there on the 20 and 40 EMA. Okay, so we have that, and on a 12-hour basis, we are slowly starting to lose momentum on the 12-hour 20 and 40 EMA. So what does that tell you? That means that over here, what we're facing is a momentum loss. And if you then look, say, on a 4-hour basis, right, what I see occurring here is a big sort of descending triangle, kind of like that, being created, okay? These big descending triangles, more often than not, as they start creating this kind of momentum at the top where it gets really choppy and you start smashing right into support multiple times, you may be able to map out somewhat of a head and shoulders pattern like this in here. Either way, it's not a good thing, right? That means that the momentum loss plus this, bearish pattern, plus the fact that US equities are not looking good, these are all creating this slight drag on crypto. Now, it's really up to assets like Atom to prove to us if they're going to ignore that drag and if they have this ability to keep trending up against the grain of the market. Now, obviously, you guys know very well, inflation being rampant across the world, global economy slowing down. There's a lot of noise out there, right? Central banks are pretty well set on bringing down inflation, and they don't really care much about asset prices. They don't care about bringing economies into a recession because their number one goal is to tame inflation. Now, whether you agree with their methodology or not, it doesn't matter, right? That this is what we're dealing with, and this is what we have to deal with. So at present stage, what we have to contend with is a market that has increasingly weaker and weaker conditions, weaker and weaker structure, and weaker, macro conditions externally that are creating a drag on our market. So when you think to the long side, I mentioned in yesterday's video, I think thinking to the long side any more than, say, level to level or more than 24 hours has been extremely tricky. So I think the better method here in terms of trading the market is more than likely just trying to get in and out, especially during the US trading hours, because that's where you see a good amount of volatility, or de-risking yourself past the US market close and either putting on hedges or just getting flat, right? Meaning just staying in cash. Okay, I think those positions have been working extremely well. So as we head into today's session, which is the Friday session before the weekend time, I think whatever the market does, in my opinion, I think you want to be out of the market by the end of the day. Okay, because I believe that whatever the market does today in crypto is, whatever it's going to do. But I believe that the Saturday and Sunday, it has a very, very high chance of whether, say today, by the end of today, say the market is up here, right? I think by the weekend time, the market can reverse back down. Or if the market, say, starts nuking today, the market can reverse itself back up by Saturday and Sunday. And this is the trickiness and that the sort of garbage liquidity grab that the market has to go through, because the market has no clear catalyst and no reason to go up. So what does the market do? It basically goes into liquidity hunting mode, and it just, squeezes out shorts or squeezes out longs. It hunts for liquidity. It hunts for weak players. It hunts for leverage. That's it. So what I'm trying to say is, be careful of positioning headed into the weekend time, and be careful of holding any position or any bias more than, say, the trading day within the US hours itself. Now, I think the only asset, like I said before, that has clear momentum to the upside is Atom. Okay. Atom is a pretty simple trade to me. Okay. If you really want to get long, your stop is right there. Okay. Sorry. Your stop is right there around $13. If that's where you want to get long, that is your ultimate last stop, because there's no reason for Atom to go down here and then push up. That, it's possible, but like you definitely be changing structure down here, because you already have, your high set, your low, lower high, lower low, another lower high. So why should it reach all the way down here and then push up? In fact, what you want Atom to do is, after creating this low and this here, right there, you want it to do something like this, tap this trend line again, and then push off. And this could be your trade entry. This could be your stop. First target profit, second target profit, and then, you can go for $19 or $20. Okay. Anyway, that's kind of how I'm looking at the market right now. I'm not in any trades. I think, if you start looking at the data, whether it's put to call ratios from the ETH front or the BTC front, I still think there are many, many people who are getting very long in ETH via calls. You can see, calls are right now almost doubly replacing put options here in Ethereum. And, like I said, maybe it's rightfully so, because guess what? In ETH, all you're really doing is you're coming back to a very TSR level, which is right there, and you're just retesting that as support. So what's wrong with that, right? There's nothing wrong with that. Well, other than the fact that, equities look like crap, and who knows what could happen, in today's trading day or in macro land or whatever, right? Maybe all this crap gets reversed and maybe we start pushing up by the end of today. That's also possible. Like I said, the volatility in today's landscape and the turnarounds in today's landscape is very, very different than what the average person is used to over, say, the last, 1 to 2 years, right? Here, the market, when it gets extremely choppy and extremely uncertain, people tend to start putting on high leverage, especially when you're almost like 8 or 9 months deep into a bear market. You're trying to make it all back in one trade, or you're trying to use excessive leverage to put on more risk to, confirm a bias in your positioning. All that stuff just gets you absolutely destroyed in this kind of market. So I encourage you guys to be very, very careful of how you position yourself, whether it's short or longs. I think, what I've realized is, and by the way, I've suffered from this too, right? I've had a pretty decent drawdown this year, but not to the point of liquidation or, losing like, 80, 90% of my gains or anything like that. In our 5K challenge account, sure, we've lost like 80% of our account value, but that's, in context of last year, us making almost 470% in the 5K account, right? So you counter that with, say, an 80% loss in a 5K account, it translates very differently. On a 2-year basis, then, we're up almost, say, 250% or 300% rather, right? So that's still pretty good. So I just want you guys to realize that, contextually, when you look at your account and you say, oh, I'm down 50 or 60% on the year. Well, did you start a new account with, say, fresh capital, and you were able to secure your capital from last year? Meaning if you started, 2021 at the beginning of the year last year, and you ended that year with, say, $2,000, right? So that's 100% gain. Okay. But then this year, say you started with, $1,000, and then you ended the year with, say, I don't know, $500. That's a 1,500, or that's a 50% loss. But on a 2-year basis, you invested 1,000 and 1,000, but your net was what is it? 1,500, or technically, 2,500, because you were able to recoup that capital from the year before that. So 2,500 over total invested capital of 2,000, right? So you could kind of see that it translates a little bit differently when you start paying attention to how have you actually done, not only on a year-to-year basis, but on a cumulative 2021 and 2022 basis, okay? And the reason I mentioned that is because I know a lot of people are kind of suffering with the fact that, you want to get back to portfolio all-time high. And, honestly, that's not going to happen anytime soon, because we're not anywhere close to a bull market, and the market trading conditions are not easy. You can't just, push the leverage slider to 20x and just start getting along in the market, because you're going to get stopped out probably within like 12, 24 hours. Because like I said, the market is, very consistently hunting liquidity both sides, right? When it looked like the market was ready to break down from here, it broke under this level, squeezed up, took out all the shorts up here, and then broke down, right? And again, 2 days back, the market squeezed up to this high, broke down, closed way the heck down here around 18,500. But yesterday, then it squeezed up even higher and broke above 19,000 again. So you can see you get a lot of traps like this, because the market is very, very uncertain, and it just does not want to break down right away, because there's either too much liquidity trapped on one side or the other, or the markets are maybe just not ready to break down. Maybe they've hit a breaking point where there's just not that many sellers at the bottom right here, right? And maybe there's a good amount of buyers to hold up the prices. There's many reasons why a market, could potentially bottom here. Does it mean that it has to bottom, once the conditions get worse? Not necessarily. Okay. Are there any questions? Let me get a sip of coffee and I'll answer questions that you'll have. Okay. So just looking at quickly the Levitas data, right? I just want to show y'all real quick. So I had a question, people asking, well, what do you think about, open interest, right? So let's look at, first of all, year-to-date open interest, okay? So since the beginning of the year till now, right, open interest at the beginning of the year was pretty much near $30 billion. Currently, it's sitting closer to 18 billion, right? That's about like a 35% drop in open interest, okay? That's pretty good. That's a pretty substantial drop. But here's the thing about open interest, right? In a market like crypto, it's almost better to assume that a majority of the open interest, and it's also, majority of the spot volume that you see generated is more so from the buy side than the sell side, because the market itself is almost always seen as a up and to the right translated asset class, meaning that almost a majority of the time you will see people speculating on the asset to the upside, because that's where a majority of the money is made. That's where the market is seen as its, rightful place as an asset class, which is up and to the right, meaning continuously gaining price, gaining appreciation, gaining value, gaining percentage gains, right? So when you see a high amount of open interest like this doesn't, in fact, to me, mean that it is a lot of shorts. In fact, it means to me that there is still a lot of people who are still long in the market. And more importantly, I believe that there is a pretty decent amount of spot sellers who could still capitulate in the market. Now, I don't know about BTC. I mean, I know Bitcoin itself has pretty, say, resolute buyers, right? They're not the kind of people who have panicky hands, but it doesn't mean that, the marginal buyer may not just step back and say, hey, I don't want to buy this, given how bad the asset class looks, given how bad the macro conditions look. Because remember, the prices on an exchange and prices on an asset are set by the marginal buyer. So it doesn't matter what the seller wants to sell at. If the seller wants to sell at 19,000, there's got to be a buyer at 19. If there's a seller at 19 and the spread of the buyer is at 18, then that means there's a buyer at 18. That means the asset is going to come down all the way to 18. So here's where you get the differentiating factor between when you see big sellers come into the market, you actually don't need that much selling to occur. You actually just need buyers to just step back and just say, oh shit, like I don't want to buy this. I don't want to touch this with a 10-foot pole. And this is where you see capitulations like this that we saw in March 2020. It is because the marginal buyer just stepped back and just say, well, I don't want to bid this. I don't want to bid 8,000. I don't want to bid 7. I don't want to bid 6, 5, 4. Okay, 3, 3,500, 3,800. All right, that looks a little bit reasonable. Fine. If this thing goes to 0, okay, it is what it is. But 3,800, all right, I can buy that. So I think when you start looking at assets, say like crypto, right, especially BTC, you have to think from the perspective of where will the marginal buyer just say, well, this is too low. Like this, I mean, this doesn't make any sense. Now, we've spent so much time at the $20,000 level. So let me go to a different chart. So in my opinion, we spent so much time at the $20,000 level, right? And not only 20,000, like we've sat very comfortably around the 18s and the 19s. The fact that we've sat so comfortably around this level means that there is actually a larger discomfort from the marginal buyer. Because the marginal buyer maybe back here in June thought, oh, well, this is cheap. Like, I'm buying at 20,000, and 6-7 months ago, it was way the heck up here around 67 or 70K. So they're getting a good discount. But now that buyer is pretty much at break even, given what happened in June. So now that buyer may rethink buying again, or they may rethink, possibly even becoming a seller. So when you talk about capitulations in the market, they happen two ways. Number one, the market itself is so heavy at a particular level that the buyers become forced sellers, or the marginal buyer who was going to buy at this level again or buy lower just steps back and says, I don't want to touch this thing because I need to worry about my job, whether at my investment fund or an institution or a hedge fund, because I might get fired for buying Bitcoin, or my returns are already shit. Can I afford to buy Bitcoin at, say, 15, then it goes out another 30% and I'm down another 30% on the year? Can a family office or people who are managing money for pensions afford to buy, say, things like crypto right now? Possibly not, just because it just doesn't look good as an attractive asset class. Well, what about bigger whales? Okay, bigger whales could step up, but they're nowhere close to the time horizon and the money size as, say, institutions who could deploy billions upon billions upon billions, So anyway, I just wanted to mention this from a larger context of how we're looking at the markets right now, from a translation of how heavy it looks here and what it means to have the marginal buyer be a little bit more stepping back from this asset class and saying, well, do I believe that this is the bottom? And if so, well, why is it not translating on the way up? And if it's not translating on the way up and I'm just buying, say, a riskier NASDAQ or a riskier S&P 500 index, well, at least to the downside, my risk is a little bit more capped in the S&P 500 index, because it's not like you're going to see bailouts in crypto from the Fed. You will probably see bailouts for banks. You'll see the Fed step up to the plate if the markets go down too much in US equities, but they're not going to be very nice to crypto. So the reason I'm positing this to you guys is to give you an outline of thinking of how the crypto asset class looks from the outside perspective and an investor perspective, looking at the market conditions right now. And so my overall thesis, okay, so just to get to my final point, is that unless the market is capable of showing you that it is able to not only outperform the index to the upside, but outperform the index to the downside, meaning if the S&P 500 is dropping, right, as long as Bitcoin is dropping at a lesser percentage, or say Ethereum or most of crypto is not dropping as much, then that's a good thing. If, say, the equities are outperforming BTC and crypto to the upside, right, well, then they're seen as a much safer bet than crypto right now, because crypto has too much uncertainty, too much murkiness to it as an asset class from a regulator's perspective, from a, I don't know, crypto cycle perspective, no narrative, no thesis, everybody kind of shitting on crypto, right? Like, so it's not really that attractive of an asset class until it shows you that strength. And there's nothing wrong with buying an asset class that is showing weakness or showing strength. To each his own. But I'm just telling you from the outsider's perspective looking in, this is the kind of thinking that you should expect. Okay. So all that putting together where we are right now, we are still very decidedly headed in a very strong downtrend, right? And we're not able to escape outside this channel no matter what we do. Not only that, when we see crypto being paired with US equities, right, we see this kind of very sharp weakness on a day like today being translated much, much heavily into crypto. But when you start seeing that, oh, well, it's not translating, that doesn't necessarily mean that crypto is going to go up. And that is the crappiest part about it all, because on a day like today, where say the S&P 500 index is dropping a lot, right? Crypto is not dropping a whole lot yet. But if you don't see that crypto is able to start, if you don't see that crypto is able to start pushing up, then what good is the point? Like, what's the point of actually buying this thing if, it's just dropping at a slightly lesser percentage? It doesn't really make it that much more attractive. Okay. So we need to wait to see when that strength is going to come back into crypto to show us that indication that, okay, now there's a bid back in crypto. Now I can step up to the plate to the long side. All right. So anyway, I don't really have a whole lot else to cover other than the fact that, there's opportunities here for the short side. Very, very, very few opportunities to the long side. Atom is probably one of the very few ones. On the short side, you could pretty much short anything and everything, like say Ethereum or Atom or Bitcoin, if you believe that, the translation from equities is going to roll over into crypto, right? I mean, that's a pretty easy way to go about, shorting the market. You just say, well, equities look like shit. I'm just going to short the market based on that, right? That's a reasonable assumption to make, okay? But I think right now, you still want to be able to keep your stop tight, as well as what I said at the beginning of the video, which is be very careful holding on to your positions into the weekend or even past the US market close today, because crypto is in a straight, middle finger mode to everybody, meaning it is out to hunt liquidity, because there's literally no money, no net buyer, no marginal buyer coming into crypto and saying, well, we're just going to keep buying this particular asset or this particular asset class, no matter what the price, right? Everybody's beat up for the last 9 months. So everybody's balances, their, risk threshold, their ability to want to bid the market with a lot of optimism, it's completely annihilated right now. Unless you're buying in like private or seed rounds, the public markets such as BTC and ETH that are already listed on exchanges, these assets are beat up. They're beat to death, and the marginal buyer is just not able to lift these assets because the sellers just keep continuously selling, or the marginal buyer is just very protective of how much size he puts into the market. Okay, so shorts, like I said, are probably better bets, but even if it's shorts, trade it from a level to level perspective. I mapped out yesterday that if you want to start looking at level to level, the ranges are kind of like this, right? So I think the range is kind of like this. So the yellow box translates to a range low around 18.5 and a much higher range high around 20,500. You can even cap it a little bit lower, say around, I don't know, 20,000. So this $1,500 range between 18.5 support and 20,000 resistance is one range. Now within that, of course, the last 2 or 3 days, we stayed within this range right here. So that range is a little bit different. Let me make that a different color. Okay, that range is between 18.5 and 19.5. 19.5 just happens to be around the weekly open, right? So that $1,000 range is another range that you can look at, okay? Now, you could also make the argument that, and this is a bit of a steep argument because I know it looks a little weird, okay? So we're gonna do this. There is 2 different head and shoulders patterns that I'm seeing. The right shoulder being built out right now. And then this maybe being somewhat of a weird looking head and shoulders that's like slightly being right tilted like that. I know it's very hard to see right now, but that's kind of what I'm looking at right now is this could be your left shoulder, head, right shoulder in development. Neither of these, by the way, have fully, grown themselves out or confirmed. So, it's kind of very skeptical that if it does pan out or not, but I'm just letting you know that that's kind of what it looks like, okay? The other interesting part about all this is, if you look at the 4-hour, actually, let me see if I can go to the 6-hour. If you look at the 6-hour time frame, right, you see this SR level around 19,000. I know it says 19.1, but let's just say 19,000, right? The $19,000 level has been very well maintained from June onward. We've rarely spent so much time below this level. Okay, so this means that unless the buyers are able to smash back above 19, it's a very high possibility that if we start flushing lower, and especially if you look at equities right now, I mean, they're not looking good, right? Here's where equities are right now, 37.04. The line in the sand yesterday was 37.50. We're already at 37.04. If we start seeing a rollover here in equities now, in crypto now, more often than not, you're probably going to see this $17,500 level tagged. But again, this has to happen today itself, like now during the US market hours, because I'm telling you that if you get trapped in a position thinking that you can hang on to this trade head into the weekend, the market is so evil, I should say, that by the time the weekend comes, the market will be right here by US markets close, and it will completely reverse on you by Saturday and Sunday. And by the time Sunday and Monday open, then it'll nuke down. So you'll be trapped from here around 18.3 all the way to $20,000. That's like a 5 to 7%, push up against your position. So you can see why it's just really crappy to be short in the current conditions of the market, because crypto is just phenomenally trading worse in terms of liquidity seeking, because you can make the argument that it's either heavily oversold or manipulated, or there's just too much liquidity. I don't know. I really don't know. I don't like the argument of manipulation because it seems very easy and almost like, if you don't have a proper intellectual answer, I think everyone just goes to call it manipulated, right? So I don't like that answer. I think if you can find metrics on it, then it's better to understand why the markets are doing what they're doing. But the metrics are so damn mixed that I honestly don't know. I really don't know why the markets are just not going to shit, and why BTC is not at 16K already, or why Atom is not breaking this uptrending structure, or why Ethereum is not breaking below this level. But it's not my job to know why things are not breaking. It's just the fact that they're not. And that's what markets are all about. Markets are almost always showing you in real time what they perceive to be the real value of whatever the particular asset is that you're looking at. If it's not, it will slowly translate over. But until that point, minute by minute, second by second, you should always almost assume that the markets are always right. So if Ethereum is not breaking this level, there's a reason why. Maybe there's just too many buyers here, and maybe Ethereum just doesn't care about equities dumping right through 37.50. Maybe BTC itself is way too oversold and saying, all right, we're done. There's no more sellers left. There's way too many buyers at this particular level. We're just going to drive this thing back up into the weekend to 23 or 25K, right? This is the kind of stuff that you have to deal with in crypto because it is the Wild Wild West. It's a much smaller market cap asset with a good amount of leverage and some pretty big players and big whales who could essentially move the markets 5, 10, 15%, without causing some mass destruction in the market or anything. It's not that hard for big players to move crypto markets, 5, 10%. Moving them 20, 30, 50%, that's a different story because that requires almost a change in structure and a change in momentum. Moving a market in 2 days, 5, 7% is not that hard. And so I encourage you guys to be very, very careful with your positioning. Even if you have a stop 5, 7% out, just assume that that stop is going to get hit. Okay. Your stop needs to be at minimum, 15 to 20% out, whether it's BTC or ETH. When it comes to altcoins, probably like 20, 25%, because Atom itself moves plus and minus 15 to 20% on a day-to-day basis. Up and down, it can swing between 10% up, 10% down. That means that's a 20% trading range, right? 20% trading ranges are massive to account for if you're trying to long or short the asset from a particular level. Okay. Anyway, so we showed you Levitas data. I showed you all, overall volumes are still down on the year, which is obviously expected because majority of people have gotten completely cleaned out of their account. Most people in general have disappeared from crypto and, rightfully so, because it's kind of like our entire space just unraveled again, kind of like 2017 and 18. But I don't think that the market is, that similar to 2017 and 18, because I actually think this time around we built good products. We built things that were, usable, right? In 2017, there wasn't really anything that was usable other than ETH. Now we have DeFi and NFTs and staking and borrowing and lending. There's so many different products that are coming up within the DeFi space or NFT space. I do a lot of my research, by the way, on Messari. And, on a day-to-day basis, when I read about all the investments that are coming up, all the growth that's going on, when I look at all the research that's compiled by Messari, they talk about different projects that are coming up, different scaling opportunities for Ethereum. There's Aptos and Sui, which are newer protocols that are kind of like Solana. There's Starkware, Starknet, there's Genesis Go. There's all these different projects, and even the gaming sector is amazing in itself. But the point is that I'm not bought into any of this as like a end all be all, hey, these assets have to bottom now and crypto has to keep going up. The macro can get significantly worse and drag crypto prices significantly lower before it starts to get better. I am very cognizant and aware of that particular reality. And so this is why, yes, you could be optimistic on crypto, but it doesn't mean that you have to be optimistic on prices right now in this instant, given how bad inflation is, given the rhetoric from the Fed, who's just saying, we don't care if we bring the economy into recession. We don't care about asset prices right now. We care about inflation, and we will do whatever it takes to get inflation under control, right? So when the Fed has been resolutely saying that, you just have to assume that, things might just get worse, right? But things getting worse doesn't mean that you have to continuously be bearish. It just means that whatever asset that you're looking at, just price in from today until 3 months after, until 6 months after, if the prices can be lower, 20%, 30, 50, 70% from today's prices. If you just assume that as a cushion and you're investing with a 1, 2, 3 year time horizon, then these are not the worst prices, right? If you're a buyer of Bitcoin or ETH or an Atom and you think that the prices, 3 to 5 years from now or 2 to 4 years from now are going to be 10 times higher, right? If you dollar cost average from now another 50% down, you'll still make 3 to 5x on your investment on average. Again, this is not investment advice. I'm just letting you know that's just basic math, right? But again, I encourage you guys to do your research, not just buying any old altcoin, right? You can't buy Phantom and just say, well, Phantom's already down almost 80 or 90% from the highs. So Phantom from here, if it goes up, well, that's another easy 10, 20x, right? That's not a good strategy, right? If you were around in 2017 and 18, you know very well that that did not work. 90% or 95% of those assets are non-existent or they went to zero, right? Like a lot of the stuff that you're seeing now did not have a token back then, or it just came into existence in 2020 and 2021. So that means that you almost have to assume that, 8 to 9 out of your 10 projects that you're thinking about buying may not exist into 2022 or 2023, 2024, 2025. Okay. But at least Ethereum, at least Bitcoin, some of these assets have showed you staying power, or even, something like Aave or Curve, which has been around for the last several years, right? These are BNB, right? Exchange tokens. They're not that, good in terms of return, like say other assets, but they could be, the ones that actually stay around for the next cycle. Okay. All right. Is there anything else you guys want me to look at? I know today's video was a long one, but I just wanted to cover everything. So like I said, just be careful, cautious of the market. I know the conditions are right now not looking that great. Let's be aware of where we are in context of the market. Let's look at equities and see how much further they slide and then go from there. Okay. Thank you, everybody. Good luck. Take care and have a fantastic weekend. Cheers.